When it comes to risk and wealth protection clients, really as the name suggests, it's about protection. Identifying where people are financially exposed along the way and having arrangements in place whereby if something were to go astray, whether it's a disability or a death, that we've got provisions in place that allow those individuals to still achieve those goals, whatever they may be. Income, lump sum amounts, really it's about bridging a gap. If we stay healthy and we continue to work, then we're achieving these things over time. Whereas if all of a sudden I'm faced with a disability and my income switches off, or I'm incapacitated to some extent, my life and what I'd wanted to achieve looks a lot different unless I've got arrangements in place that are going to help pay me, basically. They make the most difference, unfortunately, if people need to claim. We kind of say we hope that it's all a waste of money in the end, that people stay healthy and they don't need to rely on insurance. When it, I guess, comes into fruition or plays out as it's supposed to is when somebody is faced with an illness or they do face disability. We see our strategy play out as we wanted it to. We can provide reassurance to those involved that financially you're okay, you're still going to achieve the goals that you wanted to. That level of reassurance, I think, is a big win. The most common question is probably around the types of insurance that people need and how much they should have. Everyone has different objectives, and that will look like varying amounts of insurance based on if a certain event were to play out, what we want that to mean to us and to our family. The benefits of having advised insurance is really around the fact that it needs to be tailored and reviewed over time. If we're not reviewing it and making adjustments as our circumstances change, then we can't be sure that it remains relevant and appropriate to our circumstances. And that doesn't necessarily mean getting more insurance. It could in fact mean reducing insurance over time. The importance of working with someone that can help identify that and find a pathway moving forward, I think it adds a lot of value. Buy-sell arrangements are really important for business owners. You could think of it as almost like an estate plan for a company. What's often not considered is if one of the business directors or partners has to exit the business as a result of death or disability. The situation that leaves the others in is, well, how do we come up with the money to pay out their estate? And if they can't pay out the estate, what does that mean in terms of all of a sudden you're in business with that person's estate? There might be somebody that's not interested in being involved in the company. So the buy-sell agreement basically dictates what happens in that scenario, what the expectations are that the share is sold to the remaining business partners. But the secondary part to that is the funding mechanism. How do we come up with the money? Do we use money in the business, but then there's an opportunity cost of that not being available for other means, which could be important to the growth of the company? So insurance can be a really cost-effective way of achieving that, where all of the business partners have insurance that represent their value of the business. And if that event plays out, then that policy acts as consideration for their value in the company, and the shares pass on to the others that remain.